Hello, everyone. Welcome back to the channel. Well, now that I'm all caught up on YouTube's drama du jour, I can churn out another video. So I did finally wade into the drama pool. I did a little short clip that I couldn't resist on Jeremy financial education because my advice to anyone, I mean, I'm just a small channel, but my advice to anyone indiscriminately, it's great to be confident in yourself, but even if you truly believe that you're one day going to be like the best in your field, you probably shouldn't say it publicly because I mean, even in the unlikely or however likely event that it happens, it's better to just let other people say it about you. That would be my 2 cents. But when I saw a clip from this video yesterday, I couldn't resist making a short clip. So and it was fun and it got a lot of views, but the predominant focus of this channel is not going to become that. But today's video is actually going to be about Netflix. So Netflix stock had a really nice trading day today. And I was actually reading up on this before trading started. And I had read how there was some institutional money going into Netflix options, expecting an earnings beat. And I kind of thought, well, Netflix has kind of become crap this year. I don't really know if I want to touch that one. But I watched as the stock ticked up this morning, and I'll show you here. So the stock opened and it actually started dropping. So I said, see this, Netflix, risky. But around an hour or so after trading started, so we were at like 188, 189 a share. And then it started going up by 10 o'clock. And then by lunchtime, I said, all right, maybe there's something to this. So, and I haven't been doing as many options, especially call options, because this just really isn't the market for call options. But I thought maybe there's some merit to this article that I read. And I took a little bit of a risky call option at the money price instead of being further out of the money. And that turned out to be a really good move so far. The stock went up from there, closed at 201.63, but it seems like Wall Street is liking the earnings report, even though they missed on some categories, which we'll go over. You can see in the after hours trading, the stock is up 216.87. So yes, there's finally some excitement back in call options trading. It seems like for the first time since 2021, things like this were a regular occurrence in 2021. What I call the earnings blast. These are fun when you hit them the right way. But let's look at, because earnings came out right after the market closed, and sure enough, the stock is soaring in after hours trading based on the earnings report. So it's not posted here yet, but ironically, despite all the bad news with Netflix actually beat earnings the last 3 quarters. It missed in the second quarter of 2021, but there's been a lot of headwinds with things they're doing. They're kind of, some people have joked that they're kind of emulating things that led Blockbuster to bankruptcy, like they're cracking down on the subscribers. They're making customers like they're the culprit, when instead, the business model and the content probably needs some second looks. They're kind of similar to how, for those of you that remember Blockbuster, I don't remember it that well, but they charged late fees and things like that. And actually, the founders of Netflix started the idea because they were so frustrated with Blockbuster's business model. Well, Netflix, you've got to remember how you started, and it's like the business cycle. How you start can end up being your end when things come full circle. So I think this whole thing about cracking down on password sharing and all that, it's kind of counterintuitive, and it's kind of goes against their look and feel and their aura as a company. Because that's just not how they started. They started to be different than Blockbuster. But now the problem is with the streaming space, there are so many different competitors. And I think a lot of them are better than Netflix. You could take HBO Max, Disney Plus, Prime just by itself. I think Prime is like one of the best in class. Very underrated as far as what Prime has to offer on their streaming service. But for this is mainly a video about, the Netflix earnings blast and the call option here. And I'm going to show you, I'm going to go to the options tab here on Yahoo Finance. I was going to pull up Ameritrade Thinkorswim, but I'm not going to do that in this video. I'll just do the math on my calculator. So Now, this one, you typically, I would not advise to do one this close to expiration, but it just so happened that earnings came out today. So when you read like what I read today, it would make sense to enter a trade like this, even though it's risky. But everybody always should make their own decisions. But so for July 22nd expiring call options here, and again, this is not necessarily the market for call options. I mean, I would say this is a rare earnings blast scenario, even though I wouldn't call the earnings beat an earnings blast necessarily. The concept is this fits the bill. The behavior of the underlying options fits the bill for what I call an earnings blast. So let's look at what was 197.50. So this one made $3 today. I believe since when I got in at 14.80. So the way to compute these unrealized gains is you take $3 and times it by 100. So that's $300. That's a nice single day's earnings. But the thing is, this is going to shoot up even higher tomorrow, because if the stock opens what it's at right now and continues soaring, this could move up to $20 or $25. So if you take $25 per contract minus 14, that's an $11 gain per contract. And this is where options trading really becomes fun, because if you take $11 times it by 100 contracts, it's $1,100 just for holding this for, say you got in at lunchtime the day before, and say you sell out of it right after the market opens the next day. So holding it for less than 24 hours, that could be an $1,100 gain in less than 24 hours. That's highly possible with this. And this is a classic example of what I talk about as the earnings blast scenario. Haven't been able to do one of these videos in a while. I did one on Facebook. There was a semi earnings blast scenario with that. That was one that I went ahead and got out of it because of the way this market is. I took $100 gain. If I had held it a day more, it would have been 1,000. Well, today I wasn't going to let that happen. I said, you know what, I'm going to take a chance today. And today, luckily, it's a risk reward day, because I could have easily just taken the $300 gain, sold it. But now I'm excited to see what it does tomorrow and if it keeps going. But the thing with this one, just so you understand, an option that's this close to expiration, and some people may laugh at me for even getting into this, but in this case, risk reward. This doesn't always work, of course, but you definitely have to get out of this before it expires. Otherwise, if you're in the money, you're going to be assigned the shares. That's just the way options work. So this one, basically, by tomorrow, you would have like 48 hours to get out of it. So I'll probably be out of this tomorrow. I'll probably be out of this by lunchtime tomorrow. But that's how something like this can work. If you follow earnings, what I would recommend, if you're into this scenario, into this concept, you want to go to like a TD Ameritrade or an E-Trade. I'm not a big fan of E-Trade's options platform. I used that today, and that's why I wanted to get in at 215, but I ended up getting in at 197 because they default to the at the money at the moment. Let's see what the 215 did just for fun. 215 was up. Were they up? Actually, well, this makes sense because that's how options work. The one that's at the money or in the money is going to be up higher than the one out of the money. But these ones that are out of the money could come into the money tomorrow. But when they're in the money this close to expiration, you want to get out of them as fast as you can. So, but to be able to trade like this, and remember, this is no more than 5% of the model portfolio allocation that I talk about. Some of you, if you want to be even riskier, you do what you want. It's your money. But within that 5%, this trade is feasible in that. And if you want to take that 5% and trade on earnings, you would download, well, you don't have to download it, but you can go to like TD Ameritrade, and there's a calendar on the main page where you can see. In fact, let me go there now. Let's see here. Let me go there now. I probably have to be logged in. Let's see. Actually, let me see if I can just find earnings calendar. Probably have to be logged in for this, but I just wanted to see, just so all of you can see what I'm talking about. If it doesn't come up, then I'll just forget about it. But this is the main Ameritrade page. Ameritrade, I think, is really good when it comes to everything they have to offer. They have a world-class education platform for free. There's things on here that a lot of these grifters out there charge massive amounts of money for. And you can get a lot of it for free on Ameritrade. I'm not saying this to plug Ameritrade, but it's one of the brokerages I use, and I'm a fan of them. So yeah, it looks like that earnings calendar is not going to come up without me logging in. So I'm not going to log in, but you could probably even just Google it. Continue supporting the parent company, of course. Earnings calendar. I've never tried this. I've always looked at Ameritrades, but let's just see what comes up here. Company earnings calendar. So there's NASDAQ.com, there's investing.com. Let's just go to investing.com because Yahoo Finance isn't always the best for the market data. So let's go to investing.com if it comes up. Come on. Okay, so yeah, this is good. This is pretty much just like what Ameritrade shows. So like you can see for today, Tuesday, July 19th, Johnson & Johnson was out, Novartis, Lockheed Martin, Netflix, of course, and you can see which ones beat and which ones missed earnings. Let's see what other companies we recognize here. Truist, Volvo, Halliburton, Interactive Brokers. There's a brokerage that a lot of YouTubers push. They missed earnings. Omnicom, Hasbro, Ally Financial. A lot of earnings were reported today. But this is what you would do. You would look at a calendar like this, and then you could look at like for tomorrow. Let's just kind of brainstorm here. So Tesla is reporting earnings tomorrow. Tesla's not one I would like to trade options on. I did one. I was lucky to make money in it. This was last year. I would have gotten slaughtered if I did that this year. Never held the stock either. Let's see, Kinder Morgan, Discover, Biogen. So you can pick these, and what you can do, you can go back like on Yahoo Finance. Like, let's just pick one. Like, let's pick NASDAQ Inc. Reports tomorrow. Let's pick Discover. We won't pick Tesla. Tesla is too much of a buzz stock. So let's just pick Discover, and let's see how they did on their last 4 quarterly earnings. So DIS, and I used to hold the stock. Actually, I sold it for doubling. DIS is Disney. DFS is Discover. I used to hold this stock and I doubled in it, but I sold it. I actually sold it to generate proceeds for my closing costs for my down payment for my house. Let's see. And this was when I got out of it a decent time because it started dropping after I had closed out of it. Okay, earnings, where are you? Come on, I got another meeting to hop on here in a minute. That's what happens when you're a mover and a shaker. Just kidding. Okay, let's see. All right, so if we were to wager a guess on DFS, nice ring to that. So quarter 2 2021, they beat earnings massively, but that was kind of skewed by the pandemic. Slightly beat quarter 3, missed quarter 4. Quarter 1, they beat. So 3 out of the last 4 quarters, they beat earnings. So that's like a 75% beat rate with earnings. So, but you can see here on the screen, the earnings projection, it's projected to be higher than it was last quarter. So that hurdle for them to overcome is higher this time. So they could beat, I mean, based on just historical probability, just the last month. I mean, I don't want to say they have a 75% chance of beating because that's probably too high of odds. I would just take the last 2, say they missed 1, they beat 1. So they have a 50-50 chance. How's that for odds? You want to trade on that? I don't know if I would, but that's just an example of that. Anyway, that's about all I have for you today. If you like that, please remember to like, comment, and subscribe. I sandwiched this one in before I got the blockchain video out. The blockchain video should be out tomorrow, so keep an eye out for that. Thank you so much for tuning in. Take care.